This episode of the Leap Forward podcast is brought to you by Bridge LT, leaders in conversational learning and innovation. Through AI role plays, technical simulators, and comprehensive training programs, Bridge LT is revolutionizing the future of corporate and enterprise education.
Peter Cottle, a seasoned motor finance expert, brings his wealth of knowledge to this episode of Leap Forward. From his time at Lloyds Bank to his current role as consultant director with Finitive, Peter walks us through the evolution of car financing, the impact of technology, and the rise of subscription services. If you're curious about the future of automotive retail, Peter offers valuable insights that can't be missed. Get ready to learn from one of the industry's most experienced voices. I'm delighted to welcome to this edition of the Bridge Leap Forward podcast series, Mr. Peter Cottle. Peter, welcome.
Thank you. Lovely to be here.
It's great to finally get you on the show. I've heard such amazing things about you from various people in the industry. For those that don't know you yet, perhaps you could kind of just give us a bit of an introduction and a career journey to date.
Yeah, I'll try and be brief with it. Very nice to be invited. I guess like a lot of people, did I, when I was 12 years old, say I'm going to come into motor finance? That's what I really want to do. It wasn't. I started off working for Lloyds Bank. My grandfather, who's a hero of mine, I wanted to go to PE college. He thought that was a complete waste of my education, which he paid for. And within about 6 or 8 weeks, I was working for Lloyds Bank. And at the time, was that a great idea in my mind? Probably not. But it was the best thing he did. He got me focused on a decent career. And he mentioned 3 things. One was it's a respectable career. Secondly, it's a well-paid career. And third, it's a job for life. And I was talking at a conference just after Credit Crunch, and I did repeat this. And I said, if you were still alive today, I'd like to have a challenge of at least 2 of those because life has changed. But I had a good career with Lloyds, got qualified with my banking exams, and then a guy I was playing rugby with brought in the Daily Telegraph to me and said, look, there's an advertisement here. He said, you love cars, and I do, and you're in finance. There's a job for Lombard as a new business representative. And it's funny, isn't it, fate? So I took it home. I thought, this is quite interesting. Applied for the job. After 2 or 3 interviews, got this role, which is a real change from a banking in those days was pretty austere. Right. I enjoyed it, but it was a complete change of work life, really. You're out in your own car, and we got some training. Lombard was a fantastic company for training. Right. And you look around our industry today, there are a lot of people that came through that journey with Lombard.
Interesting. What was it about them that made them so special when it came to that?
They were market leaders, but that doesn't make them particularly special, I guess, other than the scale. But they've really spent a lot of time looking at their people, looking at how they can progress, getting them trained, putting them with mentors in the business. And I certainly benefited from that. I was lucky, definitely lucky. My regional director and I got on well. He seemed to think the fact I was coming from a banking background, which was actually unusual in those days, was a benefit. And so I did okay. I looked after motor dealers and some asset finance companies that wanted funding. Really enjoyed it. And then came probably the luckiest thing. I was asked to go for an interview. I started working with BL Finance. As a project manager, and in those days, obviously BL was quite big. Did that for a little while, worked with Land Rover and developed a trading style for Land Rover. And then the job came along to run Jaguar Cars Finance. And I was quite young, couldn't believe my luck, got the job.
Give me a sense of when was this?
No, that was 1984.
Okay.
So it was a great time to join Lombard. Sir John Egan had been in there a couple of years. It was a very, very difficult time for Jaguar in the early 80s. He came in there, made huge changes, got it back on track. I just loved being a car man, I just loved the thought of working for Jaguar.
Yeah.
And it was a joint venture finance company. Probably one of the best times of my career.
Wow.
The people were fantastic. I was a young guy, and I had this vision, I guess, that everybody at Jaguar were much older than me and quite pompous, if I'm honest. But it was completely the reverse. It was a lovely family to work within. Small business when you scale it to today with what JLR is like. Got to know a lot of people within Jaguar, got to know the Jaguar dealer network. And, even many years after, I've still got great friends from that environment, which have held me in good stead because it's all about people still. So I did that for nearly 7 years as managing director of Jaguar Cars Finance. And then I got promoted to run PSA Finance, Peugeot Citroën, much bigger business, completely different dynamics. And did that for a couple of years. I just didn't enjoy it. I didn't feel, despite being managing director, I thought there was far too much influence, if I'm honest, from our partner. And I said, look, I'd like to look at something else. Lombard were very good. Rover Finance were just starting as a joint venture. And I went over to there to be, first of all, sales director and then operations director for Rover Finance. And again, meeting a different set of people, fantastic. Had a great set of people working for in my team. And as I say, if I reflect on that now, so many of them, again, have done so well in the industry. That's a combination, I think, of certainly the Lombard ethos and giving them the ability to grow in their business. So did that, and then BMW came along and decided they would buy Rover, which would have meant BMW Financial Services. I just thought, this is the time I need to think where I'm going, and I got headhunted. I was the chairman of the motor committee for the FLA at the time, and again, that gives you another set of people to get to know.
Can you just tell everyone who the FLA is?
Sorry, the Finance Leasing Association. It's the trade body.
Got it.
For motor finance, asset finance, consumer finance companies.
Wow.
And there were, on round figures, there were probably 25, 30 motor finance businesses in the committee. Got to know so many people that, for a start, were competitors.
Yeah.
But we could talk about things that
the bigger issues,
much bigger issues. And that worked really well. In fact, at that time, we set up something called SAF, which was a accreditation program to give car dealers and finance people that work within finance companies an understanding of law, compliance, that sort of thing.
And can I just ask, how regulated was the industry at that point?
Well, it was still regulated in terms of the Consumer Credit Act of 1974, which was quite dated by then. Was it as regulated as today? Absolutely not. And we can talk about that probably when we get further on. Yes, it was regulated. I got to know somebody. They said, look, we'd love you come and work for us. And it was a company called Capital Bank, part of Bank of Scotland. And I went up there, and if you put it in football analogy, I thought I worked for the Man United. Well, not Man United. That's not a good description nowadays. The Man City, certainly, of finance companies, and Capital Bank were probably at the bottom end of the Premiership. But I went up there, I was astounded what they'd got in terms of technology, different things they did from a marketing perspective, and really working hard because they weren't the number one.
Right. They had that ambition, the challenger style.
And tremendous tenacity.
Yeah.
And I met their two head people. We got on really well. And I thought, the way up was, I don't think this is going to work. I came back so excited and joined them a couple of months later. And I looked after the large dealer groups. Their MD at the time gave me, I think, again, giving trust to people is so important in a career. And he knew what I could do. And I just said to him, to do this, if you want to acquire more business in the large dealer group environment in England, they were quite strong in Scotland. we need to concentrate it and take the day job away from people. So I was very lucky. I had 4 really good people in the team that just did acquisition. And I did say to Alan, the MD at the time, this won't be overnight. You can't just walk in and we'll get you through the door. And that's about relationships. And they were a tenacious 4 people, quite competitive, which was good as well. But after 18 months or so, we'd made real progress. It was fantastic. And I put that down to the team. They were just so driven to do it. A few years later, I was looking after manufacturer relationships. We were fantastically lucky, but certainly honoured to become the partner for Porsche. And I went over to Germany, to Stuttgart, several times. We were in a tender. We were the most expensive because it was a fees for service. It was their money. We just processed the business. And again, it was about people. The 2 guys in Stuttgart were fantastic, and we got on so well. And that was a real feather in our cap, because Porsche, not only is it a fantastic brand, the large dealer groups, a lot of them had Porsche,
Right.
and that got us through the door
Right.
to talk about other things. So it was great stuff. Became deputy MD, and then again, things happen, don't they? The credit crunch, Bank of Scotland got into difficulty. I was then 58. Black Horse, Lloyd's Bank. Lloyd's took over the HBOS business. Gordon Brown decided that's what they needed to do, and there was not a great deal of due diligence at the time, I don't think. But anyway, they took it over. I took a brave move then to say, do you know, I want to go and work for myself. I thought I knew enough about the industry. I knew a lot of people. But when I look back, I thought I must have had a bang on the head, because it was a big risk to just suddenly start working for yourself. But I was lucky. I got some work straight away from 2 or 3, again, people that I knew. I wrote down, when I did that, trust and like on a piece of paper, and listed some businesses and people. And it sounds rather twee, but that's what I did. If I liked them and trusted them, if they didn't fit there, and I'm sure they were thinking the same thing, and off I went. So for several years, and I hope this isn't going on too long, I'll get to the end. I worked for myself, very lucky, working with 4 or 5 different finance companies on different projects. And then I got approached by another Peter, a chap called Peter Hunt, and he said, come and work alongside us. And it was a very small consultancy business with 4 people, if you could count me. And he said, look, we're all self-employed, but we're better together. And that was a super thing. And that morphed into Finitive. There's now 10 of us. And to my mind, I like working for myself. Could I actually work in a corporate environment now? Probably not, because you get conditioned to working for yourself. And that's not an arrogant thing. It's just how it is. And we've got the best of both worlds. As I say, there's 10 of us, individuals, all with different skills, but we work as a team. So we have a morning call on a Monday. We have a Friday called Beer O'Clock, which is supposed not to be about business, but occasionally is. And it's great, because if I get approached for something, I might not be able to do it. I haven't got that skill set, but I can now actually say, but I know someone that can. So that's where I am at the moment. Finitive's been live for a couple of years now, and I love it. I will do things I want to do. And again, that doesn't, I don't mean that from an arrogant perspective. It's something you've got to enjoy doing things. And at my time of life, that's perfect. It keeps me busy. I love the industry. I love keeping up to date with things. So there we are. Hope that helps.
Really useful context. And I love the whole trust and like piece as well. And so what really floats your boat? What is a dream project for you in the industry today?
There's a lot of things going on in the industry. The one thing that frustrates me somewhat is there is inertia as well in the industry. Things that should be being done are not being done. What do I enjoy? I enjoy going into a business and someone is asking, we've got this, we'd love you to look at it. Is it right? And that's a real privilege to do and an honor, really, because they're relying on your experience and know-how. And I've gone in to a couple of businesses in the last couple of years to look at a product, to say, look, this is our product. This is one's a risk thing, it's wholesale stocking. One's a product, a PCP. This is how we do it. This is the criteria. This is our pricing. What do you think? And providing I'm working on it, and it's absolutely true, working with people that you enjoy, they'll listen. Also, I listen because I learn as well. And that's the nice thing about it, because things move and change. So I love going into something that I can think, right, I've actually influenced that for the better, hopefully. I like positive feedback, but that's not absolutely necessary. And so that's in the environment of motor finance, and to a certain extent asset finance. That's what I like doing. But there's so many challenges out there at the moment, and you'll have come across the discretionary commission situation, where the FCA is now focusing on what's gone before in terms of how it was how it worked between a finance company and an introducer. Could be a broker, could be a car retailer. And that has taken a huge amount of sight from other things that probably a finance company should be thinking of. It's clearly a real concern, because if it goes the way that some people think, and the FCA are finding that it's been unfair to the consumer, the way it's been sold, it could be a really unpleasant financial burden for some finance companies. But it's interesting that there is one of the finance companies that is a test case. They've got a judicial review on it, and that might come out with a different perspective. But I mention it because most finance companies were involved. Some weren't, but it's a real big boardroom problem. And whilst they might need to change certain other parts of their business, be it IT, sales, etc., etc., there's a little bit of off focus for that. And that's what I probably get. I think my colleagues with Infinitive would be the same, get frustrated that something needs looking at, but it's brushed away, it goes into the long grass. And maybe that's always been the case, but that's something that frustrates me, I guess.
Tell me more about sort of the kind of the long grass and how you get it out of the long grass.
Well, you've got to be tenacious. We talk about this all the time, and I get people ring me, mates of mine that are in the industry that are doing something else, and they say, look, I'm just not getting anywhere with this. This is the proposition. We think it's a great proposition, and I listen to it. Yeah, it sounds a great proposition. I've rung, I've emailed, I've had a response. They say, yeah, a bit busy at the moment. And do you know, if I could have a fiver for every time somebody talks about that, I'd be very wealthy. And so what you have to do, and there's no silver bullet to this. You've just got to keep at it, and eventually you can get somewhere. Occasionally you just have to accept that isn't going anywhere. You're wasting your own time and move on. But luckily, by you've got to set the scene and explain, yes, we understand that is a problem for you, but over here, this is something you really also need to concentrate on. And I think finance companies generally, yes, they're focused on that, but there's other things that they're doing. There's consumer duty, which again is a bit of an unknown quantity to a certain extent. People will put different spins on what consumer duty is. I simply say, if you look at your process or whatever you're doing, or you're offering, is it fair to the consumer? That's a very simplified way of looking at it, but that's how I approach it. And but it's difficult for I understand the boards of finance companies also will be scratching their head at, are we actually doing what we're doing? I think one of the things I've come across over the last few years, in terms of fairness, and treating customers fairly was the the sweet word, the sweet phrase for a few years. I think the front end of onboarding customers is pretty strong and pretty compliant, and that's technology. It's training to make sure people are being given the right advice, giving the right product. It won't happen every time, unfortunately, but being really well informed as a consumer at the point of sale is really important. But there are now good processes in place generally that would say, yes, that looks fair and reasonable. I'll talk about interest rates later, if I may. But what I'm interested in also is, after somebody's bought the finance, post-inception, it's on the books, what are you doing with that customer? Because part of consumer duty is not just onboarding, it's looking after them for the duration of their finance. And it astounds me that when I was with, one of the things that really excited me about going to Capital Bank was they had a pretty good process of keeping in touch with their customers. It was telephones, it was before technology could probably help, but they kept in touch with somebody, and it wasn't intrusive.
No.
And it was made to be very friendly and decent questions. Yes, there are some what we call retention programs out there, and there's some of them are very good indeed. But I've talked to one or two companies recently, and I say, look, okay, your onboarding's fine, and you've got evidence. You've got IT evidence of it being sound and everything else. What are you doing to make sure after the customer signed everything that they are happy? Because unfortunately, our industry, and I'm sorry, I'm going to have to say this, I do hate the ambulance chasers. They'll tell you they're doing it on behalf of the consumer. They're doing it for their own revenue mostly. And don't get me wrong, I would certainly say to a consumer, if you've got an issue, don't sit there, but go and talk to the funder, because they will look after you. You don't need an intermediary to do it, and it's with this discretionary commission now. There's very good avenues of getting to the funder. But the one thing I think, if I was running a finance company now, I'd be sure, because of the additional, you talked about, the amount of compliance coming our way, is to have that evidence after the whole thing's happened, and the customers got out of the excitement of that new car or used car, to say, bang, 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 was this okay? Was that okay? And that, if you can log that and keep it from a IT perspective, you're protecting yourself, not just helping the consumer, because there might be something there the consumer needs to know.
That's right. Life changes,
Life changes. And that's not there yet in across the industry. So there's that. And
what's the benefit, other than compliance, what's the benefit, do you think, ultimately to the customer, to the dealer, to the manufacturer in doing that?
No, that's a great question. I think take compliance away and the risk of that being wrong. One, customer retention. Now, there's a very delicate balance there in that the finance company has the customer, but the dealer is who owns the customer. I always say nobody does nowadays, but obviously from a relationship perspective, the finance company's got to be really careful that they don't suddenly take that customer away from their dealer. But if they can work in parallel to keep in touch with that customer, silly questions like, you've had the car for 18 months. Is it still right for your purposes? And somebody will say, well, actually, we're pulling a caravan now, need a bigger car. Have the ability to have the information in front of you to say, this is what you're paying today. Is that still okay with you? For the same sort of money, we could probably get you into a different car, upgrade you, etc., etc. And that needs to work not just for the finance company, because you've got to be really careful. You've got that very, very close relationship with the dealer that's brought it to you. Now, okay, the dealer's had commission for doing so. But I think if you could really work in parallel, obviously it's different from an OEM perspective when you've got somebody like BMW Financial Services or whoever it might be. They work
Joined
much,
up.
that's joined up. And particularly for new cars. But that's what I would do. Certainly it's a benefit because from a finance company perspective, you paid to get this customer. And if you're not careful, all you're doing is churning.
That's it.
And
Zero loyalty, right?
yeah, and there's no loyalty really. There would be more loyalty if you kept in touch with them and helped them. But the customer's got an ability to buy, most of the cars we talk about are used cars because the OEMs obviously very dominant in the new car arena. So do they want the same brand? Maybe not. Do they want to go back to the same dealer? Possibly not, because with the online scenario, they might have bought a car from 150 miles away. So the likelihood of them going back to that dealer for servicing for another car is probably unrealistic. But within a big dealer group, you can work on that. So it's just making the best of the information you've got and keeping close to that customer. Would that work? Well, it certainly does work. The dealerships, the retailers, and the finance companies that buy into that certainly see the benefit of it. But as I say, it's that delicate balance. I think the other thing probably worth mentioning that has changed, and a couple of years back, what would be called discretionary commission, if you wish, but the ability for a car retailer or a broker to charge a rate that they want to charge has been completely banned. So the finance company will give their introducer, this is the rate. I'm talking used cars because in fairness, probably what I should have mentioned earlier, on a new car, the likelihood for anybody to missold finance on new is very unlikely because it's normally a subsidized rate, or it's got a deposit contribution. And it's made me smile actually, because I've got nothing against Martin Lewis at all, but he made a big thing of the discretionary commission. And then you had people ringing up to say, I've got 0% on my new car. Can I claim? Wow. But unfortunately, from a finance company's perspective, you've still got to deal with that. It's adding to your burden of making a thing. But yes, so used cars are now, the finance company says that's your rate, Mr. Dealer, Mr. Broker, and that's what you have to use. Now, that's transparent. It's consistent. So you can say, well, that's fair and reasonable, treating customers fairly. Difficult to argue against to a certain extent. But the problem is you've then got to decide what that rate's going to be. And looking across the industry at the moment, some of the rates are okay. Some are, I think, a bit on the high side. Now that's fine, because if it's a used car and a customer knows that that's the rate, no matter what they say, that's what it's going to be, okay. But the better quality customer, from a credit risk perspective, will be looking at that rate, because on average, I'd say probably the rates are around 11.9 to 13, but on average, they vary. If you're talking, particularly with a prestige franchise, BMW, Mercedes, Porsche, et cetera, and I hope I haven't missed any ones out that's going to get offended, but it's unlikely a really good credit risk customer is going to buy 12.9. And I think what's happening, I'll be interested to see the statistics, because it's probably still early days to say if that better quality customer is going elsewhere. And with online funding now, there's always going to be a real stress on what point of sale can offer. So more and more people are making their financial arrangement with the car before they come into the showroom.
Interesting.
Don't get me wrong, point of sale's still got its place, because I'll probably just move across to what banks do. The banks can offer you a decent rate, depending on what your credit rating is, but then you've locked your bank lending up. And if you go to them in a year's time and you've got a daughter's wedding to pay for, they'll probably say, well, you're actually up to your credit limit. Whereas point of sale with a secure agreement on the car keeps it separate. But these people that are looking to get a better rate, I think, are going elsewhere. And that has two impacts. It lowers the finance penetration on certain brands. It won't be across the board. Some people will be doing particularly well still. So the finance penetration to the dealers dropping, therefore their revenue's dropping. From a finance company's perspective, over time, if they're losing that higher quality customer, then their book is going to be slightly less from a credit balanced.
Right. Yeah.
Exactly. So I think these things haven't played out yet.
Right.
But you see these things in the marketplace, and you think, I'd love to see in 12 months' time, 18, where that is actually going. It's probably still a little bit early to say. So that's the finance piece anyway.
And you mentioned interest rates. Anything you wanted to add on that one in terms of context?
No, I don't think so. I mean, obviously, with what happened over the last 18 months, 2 years, rates have gone up.
Yeah.
We're looking to see them come down. I would be very surprised if they don't drop again. Some of the mortgage rates have just dropped in the last couple of days. Will they go back to where they were 5 years ago? No, I don't think so for a moment. The other thing with interest rates, if you move away from the consumer to the car retailer, their fixed costs have gone up. Utilities, oil, all sorts of things that are fixed. And of course, they've been hit really badly because they've got higher fixed costs, and it's getting back to normal now, but they've had 2.5 years of less throughput. So you've got these magnificent premises, all of which take money to be paid for, with less throughput. So that's been a challenge. Again, do people look closely at their fixed costs on a regular basis? I'm not sure everybody does. But again, we're seeing a little bit of utilities coming back a little bit, don't we? But it's been a tough period. Whilst dealers, if you look at balance sheets and P&Ls, over the last year's figures, they all look pretty profitable because the used car margins have been very, very presentable. But we're moving through away from that, and I think there's some more difficult times to come.
Right, more margin pressure.
Yep, because if they've got various income streams, and as I say, the F&I side of it's under a bit of pressure. The FCA for a short period banned selling Gap, which is another income stream. It's come back on again, but it's under review, and it will be really interesting what the outcome of the FCA findings are on discretionary commission. I don't think that will change anything in terms of the current offering, but again, it's another question mark. Is this going to impact me?
Bit of uncertainty, right?
Very much so, yeah.
Interesting. And obviously, change has been a constant in this conversation.
Yeah.
Tell me about sort of like some of the kind of new finance models that come. You've seen them all come through in your career, right? But where are we at now, and where do you think we're going to be going in terms of those models?
Yeah, good question. I mean, being an old so-and-so, I remember it was just we just had hire purchase,
right?
In the private individual environment, we had leasing and what have you. Well, that goes back a long time, but and it makes me smile because PCP, personal contract purchase, came out in the UK around about 1991. Ford brought it across with Ford Options and everybody else. I was at Rover Finance. We had 3 weeks to come up with a Rover Select.
Wow.
So you had these two elements of the finance product for quite some time. PCP was originally for new cars, came into the used car market probably in the probably 2005-ish, and has grown dramatically. It's probably, I haven't seen the latest FLA stats, but probably PCP on used cars up to say 3 or 4 years old is probably 50-50 with hire purchase. But there are new things, as you're aware. The subscription model, you've got personal contract hire. And I have arguments about this, pleasant arguments with my colleagues, because personal leasing to me, yeah, that's fine. It's probably from a monthly payment perspective is the same as PCP. However, it's not as firmly regulated. And also you can be locked in to, if you've taken out a 3-year personal contract hire, depending on who you're dealing with, you can be locked in and there's big penalties. Whereas on PCP, the regulations are that it has to be a very fair settlement, which indeed it is. So the argument was, do you really need personal leasing? Possibly not in my book, but it's quite a strong product in the broker market. I suppose the unknown at the moment, because it's subject to VAT, and despite all the promises from what looks like a Labour government coming in, you don't know if VAT changes, then it makes it more expensive. So the jury's out on that. My view is PCP, and I'm not flogging it. I don't have any personal glory with that side of things, but it gives you the three options at the end, or you can hand it back if the market's wrong. You can settle at any time and off you go, or you can part exchange it. So you've got the three ingredients that, to me, if I was as a consumer, particularly, okay, everybody's been making money on their used cars, and nobody probably would be handing their car back over the last few years. But in the previous environment, you might have bought that make and model that's dropped, and you've got that protection. So happy days. The one that I still, again, I have friendly discussions about prescription. It has its place. If I was a short-term contractor, maybe in IT, say I've got a 12-month contract, would I want to lock myself into a 3 or 4 year finance agreement? Possibly not, because I don't know what my revenue is going to be. So a short-term subscription might be relevant for that, but you look at the cost and it's quite expensive. And yes, it includes different elements. You can have insurance and all sorts of other things included, but from a price perspective, I still think it's quite expensive. It does have its place, and I have to accept that particularly the younger generation are prescriptions. Their phone's an obvious one. We all have prescriptions on our phone, or mainly do. So they're used to paying for what they need, as opposed to this ownership thing. And it's a strange thing, isn't it? Ownership. My generations, we, for some reason, we like to own stuff. And a car is really an odd one. Why would you buy something that's actually going to lose money, depreciate? Most cases, some, unless you're really lucky. I like classic cars, and some of them appreciate. But we like to own stuff, and I suppose it's the same with housing. The UK's probably more house ownership than anywhere. But prescription has its place. Will it ever be a big part of the financial offering? I don't think it will. If you go into a car dealership now, with some exception, because there's 3 or 4 groups now that have got a prescription model in their portfolio, which is fine, but you'll, generally speaking, still be offered, do you want hire purchase? Do you want PCP? And the key to that is qualifying people, because whilst PCP mostly will give you a lower payment, not always, certainly give you a lower payment on more the prestige brands, but it doesn't always pay out. Sometimes a 5-year hire purchase is very similar to a 4-year PCP, but it's qualifying somebody. And if you've talked to them and they always keep their cars 6 years regardless, well, then hire purchase over 5 years is the right product for them. And I think that's really important about mis-selling.
Yes.
You've got to quantify and qualify the consumer, and that's one of the important things. I think, from a training perspective, the IMI, the Institute of Motor Industry, have got a course that people can get affiliated on, and it was one of the finance companies actually promoted it, Alfera, part of BMW, and I think that's a really good thing. It supplements the FLA, the Finance and Leasing Association, SAF, and SAF is now morphed into advanced SAF, so you can really push your level of learning up. Those two things I think are really important, both for the car retailer and the finance company, because the finance account manager, I think they need to be a different breed nowadays. In my day, and I know people joke about it, was it horses or cars? But it was cars. We did an awful lot of manual stuff. It was a manual document. You picked up the document if they didn't post it to your office, and then you'd bring them a check back. I mean, that's how archaic it was. Nowadays, they haven't got that. Technology drives the process. It's very rapid. It's quick. A car retailer can have 5 or 6 finance companies on their panel, and it goes into the system and it will move down accordingly. So I think from a financial point of view, a finance account manager could be need to be more consultative, because again, what has changed is largely now the car retailers, particularly the big companies, they've done a national deal with a finance company or 2 finance companies. So you can't go into an individual dealership within their group and say, can I have a deal? It's there, it's prescribed, they follow the rules. So you have to think, well, okay, we've got these account managers. There's no point in them polluting the atmosphere to go to a dealer just to say, can I have a deal? That's old hat. But to consult, to give the benefit of their own training, how to sell finance. And I think a lot of finance companies have got a good training process, but to a certain extent, I think there's a room for that to improve. Despite that, all the technology can provide to you, I think, a lot of dealers work with business managers. So, you and I go into a car dealership, speak to a car salesperson, and they quite often will pass you on to a business manager. And this is probably, I'll probably be stoned when I next come out. But I think every salesperson needs to be fully aware of what the financial products are and have the ability to actually market them to you. Technology will help it, and the process is, very, very rigid. And I think as a consumer, I've got great pals in the car industry, business managers and F&I directors, super people. But I think a consumer they go in. A lot of people don't like going into car retailers. For me, it's just, it's where I work, and it's just normal. But it's quite stressful to some people, and we have to accept that. And so to be past, they're getting familiar with the salesperson, build a bit of rapport, and then in certain circumstances will be passed to somebody else. And that doesn't feel right nowadays. But you've got to balance that with we talked about it before, there's a lot of compliance. And I do understand that, training business managers, 1 per dealership, sometimes 2, sometimes 3, is probably easier than the whole of the sales team being brought to that level. But I think there's an argument for that.
But it definitely makes the process more disjointed. And, I think ultimately, what you really would like as a customer is to have one person who's able to kind of take you through that entire process, as opposed to kind of the kind of slightly sort of more sort of broken, sort of fragmented kind of pass over to a business manager, right?
I think so. And that's a personal view. And I think also the other thing now, a lot of people are going, as you know, online. They're looking at a used car, and by the time they come into the showroom, they know as much about that
100%
than the car person needs to know all the range of cars. They're coming in very informed, and I think this is where technology online. A lot of people are sourcing their finance outside. So if you forget, okay, maybe we're not to sell finance on here, but when they're coming into the showroom, that's got to be so seamless, because they've had an easy way through. They've looked at the car. They know how much they're going to pay for the finance. They know what the extras are on the car. They're very well informed. That's where it can be let down. They've come in, it's been, well, this is great. All the information's on the car dealer's website. Looks brilliant. And then if you don't fulfill their expectations, and you have Don't get me wrong, it works brilliantly a lot of the time,
Yep.
really well. I'm not knocking anything at all. But if you go in and somebody says, well, actually, that car's not here, the website's not been updated, and it's actually 50 miles away at another dealership. And these things do move around for the obvious reasons. Or they've made an appointment and they don't know who you are. So from that seamless process to where the human intervention comes in, and don't get me wrong, there's some brilliant people that do this really well. That's got to be really done well as well. And as you say, it's you don't really want to be dealing with more than one person if you can help. It's about trust again, isn't it?
Totally.
So yeah, that's.
And last question, I suppose, in a sense, going back to when you began and had that wonderful kind of induction into the world of automotive through Lombard, I suppose, in a sense, right? What advice would you be giving someone kind of entering the industry, on day one?
I think again, it's a really good question because it's a very different industry. I was thinking about this actually the other day. I think stepping back a little bit from your question, I think we could really do a little bit more in the automotive industry to promote automotive in schools and universities, because it's not an obvious career move.
True.
And there's still this, I really get cross about it. We've still got this sort of tainted scenario about car retailing and car finance, and it's completely wrong. Where, as you said earlier, we're very, very compliant. There's a lot of regulation around the place, but I think if we can go and talk to people about it, that would be really good. I think we've got some great people in the industry. I'd put them up against any other industry, frankly. But to answer your question, I think to me, would I have fate, that if that guy at the rugby club hadn't mentioned, would I have ended up? I don't know. I'm so delighted I have. But I'd say, look, this is a really exciting industry. There's some great people. The opportunity to progress is fabulous. I mean, I've got really good pals, car retail. As I say, on the car finance side, I know a lot of people that have worked with me that are in big jobs now, a huge amount of responsibility. In the car retailing side, you can start at, and I say, I'm not being derogatory to technicians, that's a really complicated job, but you can start as a technician or in the service area or in the sales area, and you can end up running that business because, again, you progress through. So I would say, look, if you want something that you can definitely financially be rewarded for, providing you work hard, doesn't come free, you've got to be committed to it. You'll enjoy it. It's testing. The industry is the most, I think, incredibly resilient. It comes up with all sorts of challenges and it just seems to adapt and improve, and off we go again. So if you want something exciting, there are great opportunities. That's what I'll be saying to them.
Peter, thank you so much for your time today. It's been an absolute pleasure.
No, lovely to talk to you. Thanks a lot.